Well, good morning, folks. Quick update. I've just put my trade ideas up in my members Telegram channel, so I'm going to go through these very quickly. We'll have a look at the charts, and I've just made a summary of this, so I'm going to read it out of here because it makes it easier for me to remember what to talk about. So I've just said, good morning, folks. No change to positions. We've got a few positions on from last week, except for natural gas, which I've closed as per my comms yesterday. You can see the chart on the top right hand here, just coming back in again. We'll have a look at that very quickly. And then we're also short Aussie yen and Euro yen, and my comment is short's looking quite good. I was looking to sell some more Euro yen. We'll have a look at those yen pairs. There are some comments by the Bank of Japan, some more murmurings, and potential change to their yield curve restrictions, which they've mentioned. There was one vote or one comment by one of the members of that group of people that thought it was a good idea to start making some changes, and that could actually take place in advance of their meeting next month. So we're going to keep a very close eye on that. But we're short on Aussie yen, Euro yen. I was looking to add more to the Euro yen. We didn't do so, but I made a comment that we may get a bounce, but if you want to add here at 156.11, and we're now currently at 156, so it's already dropped 10 pips from this comment. That was a couple of hours ago, the way it looks at the moment. Gold and silver both looking like they're trying to bottom. So we're long on gold and silver, and we'll have a look at those charts shortly, but those are looking quite good. Remember, we had that Russia news, the sort of attempted or the fake coup or the semi-coup, staged coup, who knows what it was. There's going to be some ramifications from that, because even though the Wagner Group turned back and didn't proceed to Moscow, very unsettling actually for the Ukraine situation, for the Russia governance, Putin's position of power, and all the ins outs of that sort of politico that's going on there. So I think it's going to have spooked the markets. We've seen NASDAQ and S&P coming off a little bit as well. That's my next comment. NASDAQ and S&P also coming off, perhaps assisted for the same reason. WTI and crude oil also looking quite firm. We'll have a look at those charts. Actually, you can see it just peeking out from the right-hand side there as well. Major currency pairs. We're only in short euro right now. Forex majors are up for grabs, really, by both bulls and bears at the moment. See my comments in the video yesterday, and we talked about interest rate differentials and economies and recession in Germany, potential recession in France, dovish talk by central banks, but perhaps not going to follow through with that. So really all up for grabs in terms of the majors, but we are short euro US dollar based on the moves from Friday. So we'll have a look at that quickly. URA, the market's not open yet, but the URA ETF will open in a couple of hours time when New York opens. I'm going to be looking to add more to uranium longs at the market open. And then tech stocks. We'll monitor Apple, Nvidia, Microsoft. We're already short on the tech stocks. We're looking at those at the market open as well in a couple of hours' time, and they will probably gap down. And that's simply based on the pre-market movements in NASDAQ and S&P. So that's the overall summary. Let's have a look at the charts. Let's go straight across and look at natural gas. We closed our remaining position out at $2.78 after the weekend gap up, and it's now just starting to come back in again. Have a look at my video. I'll put a link to that at the end of this video. I did a lengthy video yesterday about natural gas, so I'm not going to go into detail about that here. You can have a look at all of that on that video. So that's natural gas. Bitcoin, nothing really there. On sugar, we closed out our short positions on sugar. That market's just open, just moving up a wee bit. We had this black crow with a potential exhaustion and reversal pattern at that support level. So we'll just wait to see what happens. I think we might have to fill at least this gap here, maybe a move back up to 25 cents, and maybe a move all the way back up to 25.60 or 70. But for the moment, we're flat on sugar, just waiting for a pullback. We may look to re-short sugar yet again. That last trade was a fantastic one. And then oil, I've got Brent crude in the middle here and WTI on the bottom right. WTI is the one that we're trading, but both charts look similar, and you can see we've now formed another bounce off this level at around $67. So that's 1, 2, 3, 4. This is the fifth bounce. We had a big reversal candle on Friday, perhaps as a precursor to this Russia situation, maybe some leaked news which also pushed up natural gas. You can see we formed a spike low yet again on WTI. We're long on this commodity, looking for a move back up into these resistance levels, starting at $75 and then perhaps up to $80, maybe even $85. So we'll keep a close eye on that one. We're long on that one already. And that's all that I've got to say on those. NASDAQ and S&P just coming off a little bit, actually not much of a reaction despite what went on over the weekend, just moving down a wee bit and then moving back up again. These are NASDAQ and S&P at the top left-hand side. And in line with that, you can see the pre-market prices on Nvidia, Apple, and Microsoft haven't moved very much. Once again, these markets might be spooked by the Russia situation. And I think maybe not so much that the Russia situations turn out to be a complete catastrophe, but I think the uncertainty that it's potentially introduced into the market, and with a lot of confusion about what really went on, might spook these markets a bit. So we're short really across the board on NASDAQ and tech stocks. We're not short S&P. We wanted to get short right at the top here. We missed that by a couple of points. Unfortunately, we didn't get into the S&P shorts. And that's the index that's been moving down the most vigorously, and that's the only one we didn't get. So going across to gold and silver, I'm not going to expand these charts, but you can see, once again, I sent out a tweet, and I mentioned this in my video on the weekend, that we might find support here at about 1910. And also, once again, the Russia thing might put a little bit of support into gold. Any uncertainty, any doubt, any confusion, geopolitical turmoil is generally always very good for gold. You can see that gold's actually just moving up a wee bit today, which is good news. And on Friday, we had this inverse hammer potential reversal candle. That's this one here going down to 1910. And that's an inverse hammer candle pattern, which on the face of it looks bearish. But if you think about it, actually the market tried to surge up, fell back down again, but there was definitely buying intent at $1,910. And that's formed this familiar inverse hammer reversal type candle pattern. And today we're just following through by moving up a little bit. So that looks good on gold so far. Same thing on silver. Didn't have much of a reversal candle on silver. I will expand this one. But you can see we reached that key level going into that orange zone. That's exactly the 50% retracement, 50% Fibonacci of the move from the bottom to the top. We've pulled back into there beautifully. 1, 2, 3, move down. Classic corrective 3-wave move down into the 50% Fibonacci level. Just above this trend line, not quite reaching there. We could still get down to that trend line, perhaps even lower, but for now we're holding above there quite nicely. We didn't see a proper reversal candle like we did on gold, but we are moving higher on silver. So silver will move pretty much in line with gold most of the time. And then the other one is uranium. There's been a lot of news about uranium and a renewed interest in uranium, despite it all being canned and poo-pooed over the last couple of years. Suddenly, people are reactivating nuclear plants, investing in new nuclear plants, not only in Europe, but also in the Far East and in China and places like that. A lot of interest in uranium. There's going to be a lot of demand on uranium, but it's going to take time for this price to catch up with the demand. But we should see an increase in demand for uranium. So I'm looking to buy at the top of this downward trend line that we broke out from at the beginning of this month. And that's at about 20.45 that we got in, but I'm allowing for a move down to $21. And even down to the bottom of this flat sort of bottom here. Yes, we've got a descending triangle, which is a bit bearish, but we've got a beautiful flat bottom support at around about $19 or just slightly lower. So even though it is a descending triangle, which you can see on these charts, it doesn't necessarily mean it's going to break out to the downside. In fact, to the contrary, it's broken out already through that trend line to the upside. So perhaps this descending triangle is negated and uranium's going to become a good buy. I think overall on the demand side, there's going to be renewed interest in uranium, and I think the supply side is going to take some time to catch up, which will cause an increase in the price. Looking to buy more uranium URA at the US market open. And then I've got the 4-hour charts here for a variety of yen crosses. We've been watching these very closely. Bank of Japan, as I said earlier, and various officials, Mr. Suzuki, and a few others I can't remember the names of, have been talking about the yield curve, have been talking about currency movements, have been talking about potential interventions. It's all verbal at the moment, but the moment they start bringing out a verbal assault on these currency moves with the yen crosses moving higher, in other words, the yen getting weaker, the moment they do that, you know that they're likely to follow up with some more tangible intervention. And that could be through the yield curve adjustment, or that could be through direct currency intervention, or perhaps even more vigorous verbal intervention. But for the moment, we're short euro yen. That's this one here. After that big move down on Friday, just to move back up to retest that downward trend line that was broken, and then a continued move down. And then the Australian dollar yen, I think, is also a good bet. Again, after breaking down through support, big move down on Friday, and general weakness in the Australian dollar. Just looking at the euro and the pound as good examples of the Forex majors, as I said earlier, it's kind of all up for grabs when it comes to Forex and the dollar crosses with other major currencies. Who knows what's going to happen? But I think we've got a clue. Actually, I'm in different directions on the euro and the pound. On the euro, we broke down through this beautiful rising 4-hour trend line. Big move down on Friday, just to move back up retracement to the underside where that spike low is. And we're short on the euro, more or less at this price at the moment, around about 1.089. And you can see that's previous support there and previous resistance over here through this rising trend line. So with a bit of luck, the euro will move down. However, on the pound, with the Bank of England having raised their interest rate by 50 basis points last week, we're holding above this support. We've got a rising trend line and a good red horizontal support line at 1.2678. And as long as we hold above that rising trend line and that horizontal red support line, I think we remain bullish on the pound. It's a little bit unusual to be bullish on the pound, but bearish on the euro. That's what the charts are saying. One of them will work out, one of them won't. As I said in my video on Friday, doesn't really matter. We'll let the winner run and we'll cut the loser early, and hopefully we'll get a profit out of one of these 2 pairs as the week progresses. Hope you found that useful. If you're interested in joining our community, the link is below here in the description. It's at ArcisFX.com. You can try it out for 30 days. There's no risk, because if you don't like it and don't benefit from it and it's not helpful to you, you can just email me and I'll refund your payment in full, the questions asked. As a community member, there are all sorts of benefits apart from the trade signals that I send out, or the trade ideas, and the MKT Ghost trade signals. You can read about that on the MKT Ghost website. There's another link to that below here. And I'm not going to detail all the benefits of community membership here. Go to the website link below in the description. You can find out more about that. And finally, if you enjoyed this video, please give it a thumbs up. And if you enjoy this sort of content, why not consider subscribing to the channel so that you get all my next updates. Take care. Have a fantastic trading week.